Okay. So let's get started. Welcome everyone to the fourth installment of the Yale Blockchain webinar series that I've had the pleasure to coordinate along with the Yale ICF. And today I'm so excited to be joined by Michael Casey, who is the Chief Content Officer at CoinDesk, which is a leading media platform for all things crypto and blockchain. And he's previously been at the MIT Media Lab and done a lot of fascinating research and initiatives in the blockchain and financial innovation space, which you will continue to hear about. And also I'm joined here by Mr. Kyriacos Kokkinos, who is the Deputy Minister to the President of Cyprus in matters of research, innovation, and digital policy. And he has been really at the forefront through the country of Cyprus being very proactive in developing blockchain and crypto-friendly regulations. So welcome, both of you.
Thank you for having us, Diana.
I'm going to stop sharing my screen so we can have a fireside chat conversation.
Happy to be here.
Yeah. So basically, let's get started talking about the geopolitical framework in which blockchain innovations are taking place today, right? So I remember, for example, attending a conversation, and there was one commentary that struck with me, and it was about how historically the United States has innovated a lot of products and Asia has built on those innovations. And the EU has been very proactive with innovating regulations. And at a high level discussion on economic models and competitiveness models, for example, let's start with Kyriacos, and I'll ask you a little bit about your experience with the EU. And how do you perceive innovation and competitiveness between the continents taking place, particularly in the EU? And in that context, how is Cyprus differentiating itself?
Thank you, Diana. Well, you mentioned that EU has been innovating on regulation. I don't know if I can call this innovation, because usually regulation creates different associations like constraining or over-regulation or an impediment to innovation. So we need to put things into perspective. But let me start by saying that crypto and blockchain are taking a bigger role in the global economy, and they could even help bring down borders, making international payments faster and less expensive, while encouraging trade between nations. So I think that we all agree that blockchain is a disruptive technology, and exactly because it's disruptive, to some extent, or for some countries, or for some people, it's quite uncomforting and controversial for some. I think that European Union, although we claim in Europe that our approach is that of a game changer on blockchain, and we aspire to be on the forefront, I think that we have a long way to go in Europe for declaring our space on DLT technologies and blockchain in particular. Yes, there are some very important initiatives in place, like the European Blockchain Partnership, which is an EU-wide initiative specifically devoted to blockchain. And through EBP, we work towards the development of a trusted, secure, and resilient European blockchain services infrastructure, which infrastructure aspires to develop specific use cases that will be shared among the member states of the European Union. When I say use cases, I mean, for example, simple things like notarization or education credentials, or European self-sovereign identity and trusted data sharing among customs and tax authorities in Europe. But we're not there yet. We're not there yet. We need to acknowledge, because this is extremely important. On the other hand,
it's not an easy task, and there's a number of interesting partnerships, which I find very interesting.
And because of the nature of Europe, because it's a multicultural environment, different member states It's not like United States of America, where you have one federal government, and in Europe there are different dynamics, different maturity levels. So and it's very difficult when it comes, for example, on the legal framework. It's very difficult to make fast and major steps forward in harmonizing the legal, the regulatory, and the policy frameworks of the EU member states on crypto assets. So this is a huge challenge that we are being confronted with. And although our strategy as Europeans is on the financial services regulatory framework to be innovation friendly, it's easier said than done. And I think I will stop here, and I will elaborate further on this as we move on. Okay?
Yeah, absolutely, absolutely. And turning it to Michael, how do these developments stand in the context of other geographies, which have been talked about a lot, especially the United States and China?
Yeah, thanks, Dana. Thanks for having me as well. Look, I think the China-US relationship, it's interesting to think of Europe sitting, it's the three poles, if you like. But I think the China-US one is where you're seeing, in the starkest form, probably at least the potential for two different models to emerge. And I would emphasize the word potential. But basically, China is far ahead in a particular approach to blockchain technology than pretty much anybody else. And I would say that's a centralizing approach, which is to many people in the world of blockchain almost a contradiction in terms, that you would have a centralized blockchain. But I mean, that to dismiss what China is doing as if it doesn't apply to the classic decentralization model is to really ignore the fact that what it is doing is going to be quite transformative. In particular, the development of its central bank digital currency. It's called DCEP, the Digital Currency Electronic Payment System.
Right.
And that is, it's largely focused on a retail audience right now. But the reality is that this technology, everybody's talking about its interoperability with other currencies. Why does that matter in a geopolitical context? Because the capacity of smart contracts and programmable systems, which these central bank forms of money will do, to be clear, this is a big change from what we currently have. It's quite a different concept from, say, having a Venmo or anything else existing on the banking system. This is a literal claim on the fiat currency itself of the central bank. And because of that, you can create this programmable quality. So you then have the capacity for somebody in one country and another person in another country to enter into a structural, cryptographically controlled transaction that limits, essentially can set escrow, can do things to limit volatility, it can do all sorts of things. And what that means is you do not need the dollar in the middle of the transaction, which is a huge issue, because the United States right now has built much of its global economic power, amongst other things, on the hegemony of the dollar in the world's financial system. It is the mechanism by which the US is able to institute sanctions, for example, because so many transactions have to pass through a US regulated bank in order to be cleared.
Yeah.
Right.
And like you've mentioned before, the ability to bypass US banks.
Right. So that's the point. You've now got a currency that can talk to another currency and lock in all the things that for other reasons you would have used the dollar as your protection. You can now build those protections into the protocol itself. So to me, this is the biggest change. Now, some people have noticed that China and Iran just a day or so ago announced a strategic 25-year partnership to do with oil trade and a whole bunch of other investments and so forth. And it is a direct snub against US sanctions on Iran. Countries like China saying, you can't stop us from doing business with China. Now, we haven't seen the details of it, but I have no doubt that an element that would facilitate this is the fact that they've both been working on digital currency solutions. So the US needs to think hard about how it responds to this. It cannot put its head in the sand, for one. And there's lots of interesting, I think, alternative ways that you could compete with China. but it would mean a significant shift in what is the existing model, because that model will be directly challenged by this new development.
Yeah, and as we know, historically, the U.S. has been the leader in the internet, and what's going on now with the continuation of open systems when it leads to money, right?
Yeah, so this is where I actually think the biggest opportunity lies, right? And again, it's not easy, because to give up on the dollar, which is kind of like a drug, right? It's the source of U.S. low interest rates. It means that, the power of Wall Street is what it is. It has all of this incredible power, and so it's almost inconceivable that you would do anything that would undermine that. But on the other hand, as I say, you're going to lose it anyway. So what do? I think that at some point the United States needs to go back to the principles of what it applied in the middle of the internet boom, when it was built upon the principles of what was then, things like GATT, the General Agreement on Tariff and Trade, which then led to the creation of the WTO. The American sort of post-Cold War moment was all about, okay, open systems, free trade, fair trade, and the internet was the kind of defining element of that. And the 1996 Telecoms Act, which broke up the baby bells, which really focused on the idea that you need to get rid of the gatekeepers and try to create a much more open system of innovation, was what really, I think, founded the basis upon which the infrastructure could be built for the internet to become what it was, and for the United States to really take leadership in that, right? It was the exporting of US concepts, US ideals, via this open, permissionless innovation system, which is what the internet was all about. Like, remove the gatekeepers. So I think that what needs to happen is a translation of that concept into the world of money, and that ultimately this is the way you compete with China, because China cannot have an open system. China has everything riding on its capacity to control the system. And that's not necessarily nefarious. It's not necessarily all about like privacy controls, although that is clearly a major concern. It's literally that the party cannot have open flows of money, right? So the US, I think, needs to lean into that. I don't know how that conversation begins, because it's an extremely complicated one, but it's coming regardless. So something needs to give.
That's where the regulators, how would the regulators step in? And the next big topic that I wanted to talk about with you two would be unpacking what are the challenges between regulators and innovators, right? And turning it to Michael before we turn it to Kyriacos again, in a follow-up question would be, what are your thoughts on how to regulate and innovate at the same time, that in a way that would be beneficial for both?
Well, I would start from the point of discussion that you mentioned before, the internet. You see, our case now is much more difficult than the internet, because in the case of blockchain or DLT technologies in general, we have a legacy, we have a closed system, we have a system that works today. In the case of internet, instead of Bitcoin, we had data, but there was no legacy system to disrupt. It was almost like an evolutionary improvement with some resistances, but we didn't have to do a disruption. We didn't have to break anything. Now the difficulty that we are confronted with is exactly how to break an existing system which is very strong.
Especially in financial services, which is very regulated.
Exactly. And can this occur by a bottom up? I don't think so. Or if so, it will take a lot of time. So we need the regulators, we need the European Central Bank in Europe and all central banks to take a decision and find the right balance between overregulation, under-regulation, and innovation. And this is the key challenge for you in Europe. Just in September last year, the European Commission published what we call the markets in crypto assets. The acronym is MICA. It's a proposal, but it's expected to become a mandatory regime over a 4-year period, okay? Probably 4 years is too long, because there are other economic powers like China or others that are forcing through the bottom up, and 4 years with possibility of extension to 5 and 6 years, we might not have anything to regulate because it's too long. So in Europe, although the MICA refers to crypto assets that are unregulated, such as stable coins, bonds and shares are referred as digital securities, and Bitcoin and Ethereum are crypto assets. So I don't know how this will evolve. I mean, it's just 7 months old now, this initiative. I don't know if it is, if it has a real backing or it's just an initiative just to have a label, but no real support, political support. And this is what we need to, as politicians, what we need to decide is, do we want to have a firm and position on how this thing is moving ahead? Even a decision that we're not going ahead, it's a bold decision because we need to find the answers. But I think that in Europe, at least the European Central Bank, so far has been very skeptical and conservative on blockchain, and it's leaning towards an over-regulating position rather than regulated position. Assessing the implications of the potential introduction of a digital euro, for example, is not a discussion that is taking place at the moment.
Yeah.
Because according to European Central Bank, a digital euro in legal terms would be a liability of the central bank. So does it have to be a liability of the central bank, or is it something totally different? So although the ECB, the European Central Bank, welcomes the initiative of the European Commission to establish a harmonized framework for crypto assets and the related activities around and services around this, believes that the scope of application of the proposed regulation should be further clarified. Well, further clarified means more time. Time is perfect. So do we have this luxury of time? Should we be debating and discussing among ourselves why other geographies like China or even the United States are moving on a different pace? Should we just join forces, for example, the US and Europe, to move forward together? And certainly, yes, there are threats, there are issues to be addressed on regulation, but you know, by just standing still and not taking a decision doesn't get us anywhere.
Exactly.
I remember, I think it was last year again, that a group of advanced economies, economy central banks, including ECB, announced that they were working together on central bank digital currencies under the auspices of the Bank of International Settlements. I didn't see any real outcome from this. So, you know, having meetings and committees is not taking us anywhere. We need to be decisive, disruptive, and have a step change approach rather than just. So that's my 2 cents talking on this conversation.
And Cyprus obviously is in the context being part of the EU, right? And it's had its own national innovation strategies and the national blockchain strategy, and it's developing its own regulatory framework in this context in order to forge ahead in the ways like you say. And I know, for example, the University of Nicosia, the research and the initiatives that they've really been at the forefront of advancing these developments, as you say. If you could speak a little bit more about the role of Cyprus.
Yeah, in the European continent, Cyprus, Estonia, and Malta are the 3 countries that are taking the lead. There is one common characteristic among these 3 countries: very small countries, 1 billion or less population. Is that a coincidence? I don't think so. Is that small countries are more agile and they have they can be a test bed that we can experiment and we can take innovation initiatives that for bigger countries might be more challenging and difficult to take. If you go on mid-level tier countries in Europe like Austria, Denmark, Finland, France, Germany, or even Netherlands and Spain and Sweden, they attempt to develop their local ecosystems with some sophistication in regulatory approaches for crypto assets, but they are not there yet. Other countries are much more reluctant, like Belgium or Croatia or Czech Republic. So you see, in Europe, we have different dynamics. In Cyprus, we have a very different approach. We created our FinTech Innovation Hub, and they are dealing with blockchain. In terms of academic institutions, blockchain is high on the agenda of our university ecosystem. We have 6 private universities and 3 public universities. University of Nicosia, which is a private university, is the first university to introduce a degree on blockchain.
Yeah.
And Cyprus is moving much faster than most other geographies in Europe. At the same time, we are scared. I mean, we are a very small country, and we want to do it right. We are not here to violate or give you know, the argument to anyone to say that Cyprus is a place for money laundering or for through Bitcoin.
Of course, setting the right safeguards.
So
Something that you had mentioned as well, which touches upon, we're getting a couple of questions in the Q&A actually, and I will touch upon one of them. And something I should have mentioned before as well. We got questions from the registered participants already, which we will try to address throughout this conversation. And we will also have a little bit of time at the end for Q&A. So please feel free to submit your questions through Q&A. And if we don't touch upon it through the overall conversation, we'll have a little bit of time at the end for extra elaborations of any specific topics. But you, Kyriacos, had mentioned the concept of the policymakers in Cyprus adopting certain use cases as a way to improve transparency, for example, and as a way to improve the advancement of these use cases in a way that is safe and under the right safeguards. So can you speak more about the role of transparency?
Yeah, in June 2019, the Ministerial Council, the Ministerial Cabinet approved our strategy for blockchain, and we are implementing. I mean, this is a journey. It doesn't have a start. It has a start, but it doesn't have an end. It's a continuous improvement. So yes, in terms of use cases, we highlighted what kind of use cases we will introduce, and the public sector will lead the journey by using blockchain for some of the government use cases, like you know, border control, verification of credentials in academic degrees, and others. At the same time, we started working with Batman Advisors, a firm, a New York-based firm, to help us introduce our legal and regulatory framework. And the bill for this framework is in the hands of our parliament now to be approved, hopefully within the next few months. So we're trying to have a very strong, and we claim to be the most advanced regulatory and legal framework for blockchain technologies. The national strategy has 3 priorities. One is the enabling legislative framework, which I just mentioned, and this is a work that is in progress with Batman Advisors. I think Jeff Batman is on this, is participating on this call as well. The number 2 priority, as I mentioned, is the application of the technology by the government. So we need to know the taste of our cookies, okay? So we need to try it. We need to get the feeling. And this is what my ministry is doing. And we're doing this in collaboration with the private sector, like proof of concept calls based on domains identified and mentioned before. And the third aspect of our strategy is to encourage innovation, promoting DLT in the financial fintech sector through the innovation hub that has been set up. So these are the 3 priorities of our strategy. I believe that we're on the right track. I don't want to declare that we are the most advanced in Europe. I don't know if anyone can claim that, because we are at the initial, all countries in Europe are at the initial stage, and we need to be careful to be realistic and pragmatic of that we didn't cover enough distance yet.
Exactly.
All we aspire is that we will be always at the forefront, and we will be an innovation-friendly country. And we hope that we will, through our initiatives, we will win the trust of other major European countries to follow the example of Cyprus as a member state.
Excellent. And turning it over to Michael, we've talked about the challenge of basically not over-regulating open systems and how to have a meeting of the minds in a permissionless environment. Could you speak more on Kyriakos's points, and then what are your thoughts on privacy challenges as well?
Yeah, okay. So Kyriacos talked about, it can't be bottom up, but there has to be some top down. I think, he's also implying though at the same time, there has to be this sort of bottom up aspect to it, because that's where the innovation comes from, right? So it's finding this balance. And the way that I would think about this is how does a jurisdiction like Cyprus, or any for that matter, think about harnessing the sort of innovative ecosystem that comes in an open environment? Like, how do you encourage it, but also in some respects steer it to public interest? And China's approach to that is to literally hire a bunch of engineers and say, build this thing now, right? Like, not just a bunch, like thousands. And it is a top-down approach to sort of win that battle. But in an open environment, where you win is that you recognize that in permissionless settings, which is what the internet is, which is what open public blockchains are, you unlock innovation by giving people, within a boundary, freedom to innovate. And so where do those boundaries lie becomes the core question. And part of that is addressing these words like safety that are coming up here. And I think we need to be careful when we use those words, because what are we protecting? Are we protecting the existing banking system? Is that the right goal? Like, we tend to think that we have to save the banks because the banks have to be saved, because if we didn't have banks, what were we going to do? Well, the reality is maybe the world would be better off if we depleted at least some of the power of those banks. The transition would be extremely disruptive, and therefore, how do we make that transition? But the thing about a cryptocurrency, whether it's a central bank digital currency or it's a cryptocurrency, so two separate things, but they are a bearer instrument that can be transferred without an intermediary. So how do we build systems that actually transition us away from a dependency on banks? Those are the sorts of questions that we do, and can we do that without overly disrupting everything? But the one example I'd also like to highlight here is things like energy policy and climate change. So, like, the bottom line, everybody in this call is probably aware about all of the discussion around Bitcoin and its carbon footprint. Now people are also having the same conversation around NFTs. Now, the reality is, certainly with Bitcoin, less so with NFTs, there is a huge carbon footprint. So, and a large chunk of what Bitcoin mining does uses non-renewable sources. And so it is a problem. Anybody in the crypto world who tells you it's not has got their head in the sand. However, there's a really interesting dynamic in Bitcoin that I think that a smart regulator could think about. Well, first of all, the first thing is to recognize it is not going away. So you can't just regulate it away. So given that it's not going to go away, how would you make Bitcoin more green? But more importantly, how would you make Bitcoin not only more green, but potentially even a driver of positive energy policy? And the reality is that miners are constantly looking for the cheapest sources of energy they can find. That is the open, permissionless, competitive environment that Bitcoin creates in the mining environment. So what do you do in terms of policies to ensure that there is an interest in moving to renewables, which if all things being equal is in fact the cheapest source of energy in the world, so it naturally should drive that way. And then how do you double down by actually incentivizing miners to provide the revenue guarantees to developers of renewable energy, so that in fact you're a force multiplier to increase the amount of renewable energy development, R&D that goes on, and expand the actual pool of it, right? That sounds counterintuitive to all those people who are telling you how Bitcoin is going to fry the planet. And that statement, by the way, isn't wrong if we were to let things go their course and there was no actual deliberate strategy to try to get this stuff in the right direction. Exactly. But it is nonetheless, I think, the right way to do it. And I raise this just to say, these things are not incompatible. You can create a regulatory strategic environment that leverages the open competitive environment that this open commercial system works, but does so in a way that serves the public interest. I think we need people to start thinking outside the box more than they do. When I wrote The Age of Cryptocurrency with Paul Vigna, we had a chapter about regulation, and we called it, that title was, Square Peg Meets Round Hole. And I really think the biggest problem many regulators face is they're trying to impose a regulatory framework on a system that really doesn't comply with that old paradigm. Right? Even the very idea of money is something that it's a social construct anyway, and where it's such a deeply ingrained social construct that we've built an entirely new regulatory framework around it. But Bitcoin doesn't necessarily, fit with that, right? I mean, it's not a fiat currency; it is a form of value exchange, and in some respects, the actual money may be the protocol, not the thing. And so, like, it's a system of value exchange, and like in this day and age, likes on Facebook are a kind of form of currency. There's a whole realm of digital data, and that is a new way of thinking about value exchange that I think is relevant to this conversation around what are we actually regulating? Because if we start to jam everything into a banking regulatory environment, it doesn't fit, and criminals and others will always find ways around that, and new forms of value exchange will evolve in this technology that aren't being caught anyway. So we need to be able to think about how not only the developers but also the users of this technology are going to be creative in how they use it, and how do we steer all that into a direction that's positive. I will talk a little bit about privacy. Look, it is critical. And this is, I think, again, where I think there is an advantage for Western civilizations, for Western societies like Cyprus and the US and everybody else in between, to differentiate themselves from sort of more centrally controlled places like China. Privacy is critical, not just to this core idea that I shouldn't be surveilled, but it's actually fundamental to the functioning of a free market. And so in money, for example, if you start to track every coin and sort of like surveil everything, then ultimately it loses its fungibility, because now one coin that has got some horrible history to it is worth less than one that isn't, right? So then we lose the capacity to exchange money. So that's one part of it. But the other part is this concept that I think was well brought to the fore by Shoshana Zuboff in her great book, The Age of Surveillance Capitalism, that we need a freedom from surveillance as human beings to be able to exercise our free will. If we are being controlled by algorithms, be they state-run or corporate-run, then ultimately the free market can't work, because individuals are not acting on their desires. They're acting.
Also, algorithms can incorporate bias.
Some algorithm, right? So we've got to be able to do this for the sake of society, for the sake of capitalism, for the sake of free markets. And so privacy is just, I think, the issue of our time. I like the fact that Europe, at least, I don't know that GDPR was the best solution, but at least it was an acknowledgement that this is a critical thing that societies need to protect. And so I think a conversation around privacy, I'm not saying that we shouldn't find that criminals should not have, an opportunity to escape and therefore conduct their criminal activities. But creative solutions around zero knowledge proofs and a whole range of cryptographic solutions that may allow us to actually achieve what we need to achieve in terms of verifying the validity of transactions without exposing everybody's individual details, is I think the way to go. It just needs to be done at a level where there's a meeting of minds around the protection of these really important principles in terms of freedom and everything else. And again, as I said, an opportunity for the West to actually differentiate itself from the closed systems that will emerge in other places.
Yeah, that's a great point. And as we move forward to transition this conversation and focus, we're starting to focus more on on the concept of really how global financial centers could be transformed by blockchain technology. And here I'm going to touch upon a question and ask, particularly as we transition away from the US dollar, which today is the primary currency for international trade and for oil and whatnot, how would this affect the systems that are already in place that would service US debt structures, for example, through traditional banking infrastructures, and also the role of fractional banking, which provides the capital and that provides the ability to have fungible money. So that's a topic which central bank digital currencies open up very much, which you had talked about.
You want me to take that one? I can start with it. Yeah. So look, I mean, it's a huge like ball of wax. I mean, everything is built around the dollar right now, and I saw that in the Q&A we had sort of people talking about, well, hang on a second, everybody's using the dollar anyway, and that's true. I mean, I would the thing to do is to step back and say, like, just because you assume everything is like what it is now doesn't mean it won't change. And in some respects, the dominance of the dollar is its own problem. Like the fact that you mentioned there, the dollarization of debts, because those debts are not just in the US, right? So much of the European banking system is sitting on dollar debts, which is why when the COVID crisis really hit home in March, the Federal Reserve had to print massive amounts of money and strike agreements with the European Central Bank to provide an unlimited amount of dollars into the European banking system so that we didn't have a collapse of the banks based on their own dollar needs. And so the Federal Reserve is acting as a central banker to the rest of the world. It is essentially a lender of last resort to everybody. And there's an inherent and massive and under-discussed contradiction in that. And that is that the central bank's obligations are entirely to the political demands of the United States. So how do you manage a political system? How do you manage a political objective in the interest of the US economy, but at the same time provide the needs to the rest of the world? Therein lies the challenge. And I think that challenge gets really, really difficult once these debt levels, whether dollar denominated or not, rise to where they are. We've got, GDP, debt to GDP levels, in some respects like we've never seen before, largely as a result of COVID, but obviously the sort of the legacy of the financial system, the financial crisis as well. And at some point, the only way for governments to resolve that is to inflate their way out of it. This isn't nefarious. This isn't debasing and devaluing. This is literally what happens, and it's not necessarily even a bad policy to find a way to actually pay your future debts in current in future dollars that are they're cheaper for the governments to pay with. But of course, if that happens, how do you avoid a currency war? How do you avoid everybody like chasing to the bottom? Because if Europe does it first, then that's a problem for the United States and so forth. And so I see all of this starting to unravel at some point unless there is a coordinated response to it. And that coordinated response has to start thinking about what is the actual underlying unit of that international monetary system. And so when people talk about that, I think it was a Hemingway quote, how did you become bankrupt? And it was like, at first very slowly, but then all of a sudden. That is the thing that we're facing here, because not only is there this stress on the global financial system coming from this current environment, there is now the technology to get around it. And that is, again, not sufficiently discussed. So everybody wants dollars right now. So yes, the dollar is the most popular currency in the world because you need it more than ever. But at the same time, everybody doesn't want dollars because it's creating all these problems for themselves. So countries like China and others that have a chance to actually sort of start building and working around the system will eventually, I think, create this world. Now that doesn't mean the yuan becomes the next global reserve currency. On the contrary, we move to a world where there are actually multiple competing currencies. And we've had this in the past. If you read the works of Barry Eichengreen, has done a lot of work around the history of international monetary system. We've had plenty of times where there have been sort of multiple currencies competing. And I think what we move to is a world where there is the US dollar competing with the renminbi, but also competing with, say, corporate currencies like Libra. But then, of course, into the mix being true permissionless currencies like Bitcoin. I don't think Bitcoin becomes the global payment vehicle necessarily, but it does become something like digital gold that sits in the middle of this system. And how all that plays out, who knows? But we need to be, thinking, I think, very, proactively as an international community, thinking about another Bretton Woods discussion on where all this is going to go.
Exactly. And what about you, Kyriacos? How has the US, the EU and Cyprus tackled this issue in particular with central bank digital currencies and monetary systems?
Well, as I said, the European Central Bank so far has been rather skeptical and conservative in adopting with a daring approach the issue of digital currency. I think that there is a positive appetite towards crypto assets, but not cryptocurrencies per se. And by just, it's on a wait and see situation in Europe. And I believe that this is not the way forward. We need to take a stand. And we all see what China is doing with the digital currency that they are about to, or they wanted to issue. Now, China alone cannot control the currency or the digital currency global landscape or ecosystem without collaboration with other geographies. I believe that Europe should collaborate with the United States on setting a roadmap for 5-10 years on digital currency, and how it's not a matter of friction or confrontation between the traditional dollar system that we all live now versus a digital currency. It's just that how do we create a world that is safe, and two different currencies, the digital currency and the traditional dollar system or euro currency remains as a key currency, at least for the years to come.
Right.
And I believe that what Europe is skeptical, and I can understand, okay, in 2020, it has been a great year of investment in cryptocurrencies. And at the same time, the downside is a firm rise on crypto frauds. So it's a genuine concern to say, you see what happened in 2020?
Right, it's a very real challenge. Yeah.
Okay. Global crypto exchanges have suffered high-profile hacks, where hacks on decentralized finance companies accounted for more than 20% of the total theft volume in 2020. So whatever we discuss in webinars like this one, we need to find real answers, and we need to, to really think hard. How do we respond to these kind of questions?
Yeah.
In the years to come, we may see various types of cyber fraud, fake crypto investment platforms, fake crypto wallet scams, and new forms of malware targeting lesser known cryptocurrencies and crypto jacking. All these kind of dilemmas, they need to be addressed. It's not just creating a debate and the regulatory framework. We also need to address the real threats that are in place today. I believe that most of the answer to this kind of threat, how do we respond, is the right regulation. We need to regulate. We need to not under-regulate, not over-regulate, but the right regulation. That will.
Yeah, I love the way you approach the term, and I'm going to touch upon a question here as well that's very relevant to this conversation. When we talk about addressing these very real threats, when we talk about addressing potential disputes, what are your thoughts on how to go about approaching dispute resolutions through blockchains? For example, is there an international law of blockchain? In what country should the dispute be resolved? What country's law would apply? and what are the implications, the identities of blockchain parties being revealed in order to resolve the disputes. And of course, I know you're familiar with the concept of smart contracts and the conversations, especially coming out of the UK on the applicability of smart contracts as legally binding, but there's a lot of implications as well. I'd love to hear your thoughts.
So for myself or for Kyriacos?
First, Kyriacos.
Yes, yeah.
I think you're on mute.
I was on mute. Apologies.
Yeah. It's okay.
I really don't have the answer. It's a difficult question. I mean,
yeah, we don't have the answers as a global.
We don't have the answers. I don't think that there is any jurisdiction or any law that can protect us and to say, okay, if there is a fraud, then it's under the law of Cyprus or UK or United States that this will be judged. So this is what exactly we are missing to answer all these questions. I'm not an expert on blockchain. I am a policymaker and I am a technologist, and I love, to explore this kind of innovative technologies. Probably Michael, not probably, for sure, Michael is in a better position to and have a more holistic view, a detailed view on the various jurisdictions. But I don't think that any country has the full set of answers to your set of questions. On the contrary, I see countries that have gone the other way and have chosen to ban the trade of cryptocurrencies. Other countries are skeptical and decisive. So, Michael, what is your thought on that?
Yeah, thanks, Kyriacos. I certainly, it is a big, complex set of picture, as you're right, the multi-jurisdictional state of the world and like all these competing legal systems. We have, in that sense, I remember taking an international strategy course in my graduate years that was described the state of the world actually at an international level as being one of anarchy. And that's at that international level kind of is, right? So, I think starting point is going to have to be to look at what do we do with the internet? Because the internet faced a similar problem. It was a world of multi-stakeholders across the world and multi-jurisdictions, and yet we still managed to send information back and forth and enter into transactions with each other. And participants in that world are bound by their own, national geographies and the jurisdictions associated with them, and yet there's still a capacity to engage in this. And one of the solutions, where the most decentralized parts of the internet needed to be resolved were things like, domain name management and a whole host of other, frameworks and standards for how, data was transferred and so forth. And that multi-stakeholder solution meant that we had bodies like ICANN and others that were not really, the US had certainly at the beginning, a more sort of direct leadership role in some respects of the government, but ultimately it was founded on a model of private stakeholders, telco companies, governments, of course, and others coming together in this multi-stakeholder environment and building that framework. And that's where a lot of the current thinking is around blockchain governance. It's like, how do we use that framework, that multi-stakeholder framework, to create essentially arbitration solutions that can reside and happen above, if you like, the legal frameworks, and only if there is sort of a serious dispute do you then drop down into the real world of law. And of course you have to have some underlying framework for what that is, and maybe that can be from a case-by-case basis as to which contracts are established in which jurisdiction or not. But most importantly, you need to have this fluid arbitration environment to start with, so that you can limit the needs to get into that legal framework. I will use one example that I think is really interesting, not to say that it's the answer, but just to say that it was a way to address these things. There's a group of people, I had some involvement as an advisor to them during my time at MIT, based in Hong Kong, who created something called the Belt and Road Blockchain Consortium. And what they were trying to do was grapple with exactly this problem with regards to the future state of smart contracts and blockchain related transactions in the 65 country structure of China's Belt and Road project. And the thinking from some of these guys in Hong Kong, some of whom were true believers in Hong Kong independence, and were actually quite concerned about Chinese dominance of Hong Kong itself, was to say, the rest of the world isn't going to like having China as the underlying anchored judicial system for the smart contracts and that we're going to enter into. If everything gets decided by a Chinese court, is Singapore going to want to participate? Is India going to want to participate? So they were like, come on, we need to think of an environment in which whatever the underlying sort of foundational layer of this is somewhere that is respected for representing property rights. And that's where they were making the case for Hong Kong as the place where there would be essentially the base legal framework for sort of, I suppose, proving the smart contracts. And it was actually, to your point, Diana, it actually addressed this question of identity, because it was like what they really wanted to do was define not so much the law, but a standard and a legally enforced standard for what constitutes a corporate identity in terms of key management and so forth in a blockchain environment, so that when there were entities that could have that arbitration solution, as I said, at that higher multi-stakeholder level, they would know that their identities were themselves proven down into some, reliable legal framework. It wasn't to have every single decision resolved in a Hong Kong court, but at least you could start with that as the basis for then allowing for something more fluid to happen in a multi-stakeholder environment. So those are the kinds of ideas that people are talking about, is how do you have an anchor around things like identity that can at least give parties to a transaction the capacity to negotiate, arbitrate, whatever, in the knowledge that they're dealing with somebody who they can trust, because of the fact that there's one jurisdiction that's resolving that. The world needs to come together and figure this out, because at the end of the day, governments need to be a part of that. I will say that the JFSA, the Japan Financial Services Agency, has also done quite a bit of work in this space, which is good to see. The Digital Chamber of Commerce in the US, I think the Blockchain Research Institute, led by the Tapscots, has also done a lot of work. The World Economic Forum is doing a lot of work. My co-host of the Money Reimagined podcast, Sheila Warren, is involved in this. So there's quite a lot of conversation going on around, the future of blockchain governance. But ultimately, multi-stakeholder, solutions that just limit the burdens on courts is the way to go forward.
Yeah, and like we've seen in the US, across different countries, we have been paving the way toward international partnerships. Like Kyriacos mentioned, the need for a stronger sense of partnership, especially between the EU and the US as the Western world. What else do you see as other challenges in implementing blockchain solutions to replace legacy systems? And if any other issues would arise in that process?
Well, I mean, I would say that just almost by definition, it's the biggest barrier is that it is phenomenally disruptive to deeply entrenched institutions, right? I mean, it is a disintermediating technology. So, and this is all technologies to some extent disintermediate, legacy incumbents, and there's a problem with that. But when you're talking about incumbents that are banks, which are regulated and intertwined in a way that is deeply ingrained and fundamental to governments as well, then it's really hard. I mean, it is just difficult because there's so much political interest in it, and there's so much money caught up in it. Mm-hmm. So, I think that we can't then say, all right, well, let's not do it, because it will happen anyway. The reality is that this innovation is happening. So then the thing is, how do you confront that, and how do you deal with it in a way that is necessarily going to change the existing incumbent structure, but does so in a way that does minimal harm through that transition process? So it's a very eyes wide open approach to the inevitability of change. I mean, it is going to change, and anybody who thinks that it's not is just in denial. So how do you enable that change in a way that is certainly is, you have to embrace disruption. You have to understand that shareholders will lose money, that people will lose their jobs, all these things will happen, but in a aggregate sense that minimizes the harm to human beings, and in fact actually allows us to obviously capitalize on the positive aspects of that change. That's where the thinking needs to go. It's
exactly.
Yeah.
What I find fascinating about these developments, which as you both say are not going to go away, is the integration between blockchain technologies with AI, which would be able to draw insights, and machine learning, which could draw patterns and predictability. And for example, Internet of Things, which would capture the data, blockchain recording the data. And it's one of several emerging technologies that work in combination to address one or several of the questions. There's also commentary on how could these developments be relevant and helpful to especially address social concerns in developing countries and developing areas like Latin America, but there's also parallels between, like you mentioned, Argentina and Greece. Could we speak to that a little bit?
Let me comment on something very important and right thing that Michael mentioned. We need to be daring and enable disruption, and by just standing still on the denial stage doesn't help. But at the same time, we see very influential opinion shapers and international leaders that are giving mixed signals and different messages. And this is a key thing that we cannot ignore. For example, Bill Gates, okay? He's not in favor of cryptocurrency. He says that cryptocurrency is an innovation the world could do without. He feels that cryptocurrencies are prone to abuse by swindlers and in money laundering schemes. On the other side, we see Elon Musk of Tesla, who announced that you can buy a Tesla with Bitcoin, and which would then be converted to cash, meaning the company is adding to its real sizable slash of Bitcoin. And you know that I think last year, Tesla made more money on Bitcoin than selling cars. So you see all these mega powers, technology mega powers, are not even aligned on how you move forward. And then naturally, states or individuals or institutions are scared to take the bold move. And another aspect that I would like to highlight, we didn't see yet the in this debate, because it's all about a very important debate. We take this as a legal debate or as a technology debate, but we didn't see social sciences, sociologists, humanistic sciences to get involved into the debate and really do a conversation with the technologists and the regulators, how the social fabric is being affected, positive or negative, through the lenses of social sciences. And this is another debate that probably we should prompt as policymakers to give incentives and do joint research, technologies, regulators, and social sciences researchers to work together, because it's a big step forward. And not everyone is convinced or ready to make this jump.
Right. And if Michael, if you could talk about the case of Argentina real quick, but we are approaching the end of this session, so I'll just be mindful if we can.
Alrighty, I'll be quick. Argentina is the place that got me into this space. I lived there for 6 years, and I think it's really important to, when you ask about the value proposition of things like Bitcoin, to try to put your shoes in your feet in the shoes of an Argentine or maybe of a Greek or of a Turk at the moment, where Turkey is going through repeated crises. The the fact that we take for granted this functioning existing financial system is dependent upon institutions which enable that, and government, reliable government, and so forth. Argentina has a history of basically a crisis every 10 years. It went from being the 7th richest country in the world to the 75th. And that vicious cycle is built upon the fact that there is really very, very little trust. It's ingrained. It is very difficult to break. How do you resolve the trust problem between the people and their government? You don't, and you end up with the money breaking down consistently because everybody's always trying to avoid taxes. Everybody's always trying to get out of pesos into dollars. So Argentina is a really interesting test case for how you might just actually reimagine the system. You're just not going to get a government system that's going to work in there right now because there's just not the layer of trust. The covenant has been broken between the people and the government. So you need something else that gives you that institutional framework around which you can start to transact, that you can exchange value, that you can build systems of value on top of. And that's where cryptocurrencies and blockchains get very interesting, which is one of the reasons why Argentina is really one of the hotbeds of innovation within this space. Not just the fact that people are using it there as an alternative currency and other crypto and stable coins and all sorts of things like that, but also that some of the most dynamic innovators in the crypto space are coming out of Argentina, that there is a very inventive approach to different models, precisely because these are people who've grown up knowing that the existing model doesn't work. So Argentina is a really good place to watch as a kind of a canary in the coal mine in a positive sense. I'm actually, for the first time in my life, hopeful that Argentina will be able to break out of this vicious cycle precisely because the ecosystem of innovation there is so dynamic and so interesting. We just did a podcast on this last week, and I encourage anybody to check it out. Money Reimagined. I'm doing a blatant pitch here, but Money Reimagined on CoinDesk is the name of my weekly newsletter, and it's also the name of our weekly podcast. A really interesting conversation on that. And yet, look, it's as I said, you see this all over the world. We've seen it in Nigeria this past year. You've seen it in, as I said, Turkey. You've seen it historically in lots of other countries where that breakdown is almost endemic, right? And that's why, you know. And then I think at the same time, they are a microcosm of the greater risk that the global financial system faces, because things like COVID, the global financial crisis of 2008, all of that, and I would say the sort of shift towards populism and isolationism that we've seen, without mentioning any names, in certain parts of the world, you know, in very important countries, is a sign that a lot of this sort of the post-Cold War, sorry, rather actually the post-Second World War framework in which all of this worked is being challenged in a way that
a lot of the institutions
has challenged it through history. So a lot of lessons to be learned from these places.
We are out of time. We still have so many questions that I would love to touch upon. I will be writing a blog post following up on this conversation, so I'll try to elaborate a little bit more on certain issues we might have not have touched right now. But thank you so much for your fantastic insights to both Kyriacos and Michael. It was a pleasure to have you.
Thank you, Anna. Thank you, Michael, and looking forward.
Yeah, and thank you everyone for coming.
Bye-bye.
We'll have the next one in about a month.
Okay.
Bye.
Bye-bye.
Have a good day. Bye-bye.